Hello, this is Stefan Dote from TradingCandles.com. It's May 28, 2014, and we appreciate you coming here to see our trading room for the day. Just to go over some disclaimers. TradingCandles.com is not a licensed financial advisor, and this video is for educational purposes only. And your viewers should do their own due diligence before making any investment decisions. Today's a little curious, behind the tape, as we call it. There's been some continued heavy buying in the bond market, including government and corporate bonds. The 10-year Treasury yield is now down to 2.43%. And the thing that I have been finding interesting for quite a while is the yen. The yen is a safety currency. So, people feeling risk, they'll buy the Aussie because they have a lot of commodities. The yen is more of an economic currency. And it really had a downfall and hit a bottom, and it's kind of been moving up lately. Last year, Japan decided to raise tax rates quite a bit. And when I heard that information, it only made sense that they would eventually have to ease their monetary policy because you're basically taking away people's income in the form of tax hikes. So there's going to be less money to go around and more difficulty for people in their purchases. Now the news is recently in the wind that Japan is probably going to do some monetary stimulus, which basically means they're increasing their money supply. When you increase your money supply, your money becomes cheaper. Foreign countries can buy more goods from you, so that hopefully increases employment in your country. However, the currency itself normally goes down when this happens. But in this case, the yen is still slowly making its way up off the lows. And as a safety currency, it's a little curious to me that this is kind of going on, and most traders, especially retail traders, who don't pay attention to the currency market and really don't understand the significance of what goes on, because this is the largest financial market in the world. In terms of trading, this is where all the big banks trade, is where they put their money and that type of thing. So let's go on, just look at a couple charts, and then we'll wrap it up. We're just doing a quick one here today. And we're going to share some charts. So the first chart we're looking at here is a 9-month chart of the yen, just a basic chart. And up here, where we have this double top formed, this is where the news kind of came out last October, where they were going to be doing this giant tax hike. And then, as you can see, yen just proceeded to go down and down and down. Then come the beginning of the year, and also to make a note, this is kind of when the market was having a fairly decent run. So as the safety currency is going down, you can see the market having a fairly decent run at that point. And now you've seen the Aussies gain some ground and kind of gone down. Now we've broken above our moving averages here. We've even had a 50 cross the 125, and it doesn't look like much, but it's a little tiny tell of something interesting going on. If we look at the 10-year T-bill, you can see that when this is going down, that means people are buying, so the yield is decreasing. So now we have our yield down here at 2.43%. In the corporate bond market, LQD, which is AAA rated corporate bonds, you can see that we have just been having this tremendous uptrend here since last fall. When the Fed started tapering their stimulus, the banks have less money in reserve. So a lot of it was they had so much money, it was kind of parked and just collecting a little bit of interest, but it was a good return. In this case, where they have less money to invest, but they feel that business is probably going to continue to do well, but stock prices may not appreciate as fast. They're going to put their money where they think it's safe, which would be in corporate bonds, safe corporate bonds. So we have AAA bonds here. This returns about a 4% per year, and whatever you get on the actual increase in it itself. And then if we look at the high yield bonds, these are going up quite beautifully. These are a little bit more risky. They're not all AAA rated bonds. The return on this will be over 5% on your holdings. So that's also not too bad. And then when you come and finally look at the junk bonds, which are going to return maybe 6, 7, sometimes even 8% on your money, they've been just going up like crazy. So the big money is feeling pretty good about business and willing to invest in some, I don't want to say riskier assets because it's, they feel the business is going to do good. However, they don't feel like maybe the business is going to be growing substantially, but they feel that there's going to be some stability in the corporate arena, which again comes back to the constant iteration of sideways market. And just to finish up the day, we closed 4 positions today. We closed FLT. Honestly, I'm not sure what this stock does. This was kind of a technical trade. We purchased this here back on March 18th, which is right about here, at 120.13, and we sold it today at 128.17. So we picked up 6.7% in about 2 months, a little bit over. So not a bad trade. You know, I'm still feeling sideways, and I'm feeling us coming up to this other top. So there's some resistance there, and in a sideways market, you want to take your profit to strength, and you want to purchase more into weakness. I tend to be a momentum trader, and I like to purchase things when they're going up, but when the market itself is not going up, then you have to play the strategy that's appropriate for the time. And just to kind of give you an idea of the markets themselves, I'll do a little sidetrack here. So here we have the S&P 500, we have the Dow Jones on these 3-month charts, we have the NASDAQ, and we have the Russell. So you can see we had the gap up yesterday. Today we have a doji on the S&P 500. We have this other little candle that's almost really a bearish engulfing. We have a little harami type candle here, another little harami type candle here. So these candles could just be a pause day. Or possibly, sign of weakness and maybe a short-term pullback. With the Dow, we have it hitting here at its highs. The S&P is the only one that's kind of making new highs. And if you'll notice, I had this price target drawn in here back in February, which we pretty much hit and are sitting on from that gap. And again, just to show the technical knowledge, this measuring techniques are just phenomenal. You should take the time to learn those, really worth your while. Now let me go back to the other 3 stocks we sold off today, and the grid charts up here. So the other stock we sold today was HRS. This is another stock I really do not know what they do. And again, as a technical trader, sometimes it doesn't matter. This is a beautiful chart. Why did I sell it? I took a peek at the financials. It really didn't support this value, and I had a little bit of a profit in it. I bought it on 227, which is right here. So we bought it here on this day. That's because we like to buy it when it goes up. And today we sold it for $76.94. So I got a 4% return on my money in about 3 months, which may not sound great, but beats a CD, and I'll take that every time. And if we have a little pullback, I may get into it, but I'm happy with that trade. And the transportation index, which we've been talking about for the last several days, and boy, you can see it went up on some serious volume today. Way over, and I think that's a carryover from yesterday's manufacturing news. So we got into this on 3.6, which is right here. Let's fix that. Into this on 3.6 right here. So as you can see, again, I do like to buy when things are kind of going up. You can see I put a price target at 142, which we had surpassed, and then today we hit 144. With the Dow sitting at that resistance we saw, it's sitting at its highs, but it did not poke above its highs. And when we have a gain like this, I think it's time to take some money off the table. So we picked up 7.2% in about 2.5 months. Again, I think that's a pretty decent return on our money. We bought it for $134.83 and sold it for $144.56. So a lot of people will be asking, well, why didn't you hold on to this? Well, I'll tell you what. If this makes another formation that tells me to get in, I'm happy to buy it at higher levels if I feel it's going to go up, and I'm happy to get back into it at lower levels if I feel it's going to go up. But taking a profit is part of making money in this game. Buying and holding for long periods of time is not really the way to be a trader. And finally, we have LXP, which I do know is a biopharmaceutical stock. And we purchased this on 3.4. Let's see, 3.4. We purchased this right here. So we purchased a little bit after earnings, and we let it do this double bottom down here. It never broke the 125-day moving average. Matter of fact, we had this nice hammer where it came up and came off, rode sideways, came back up. I sold it today again because, look, we're sitting at the highs, and it went up and pulled back. If this candle, had closed at its highs, I would be far more tempted to only sell half my position and let the rest ride. But when we pull back like that, we have all these what they call topping tails, and so they pushed it up, and now they pushed it back down. And we get a little spinning top here. Now we pushed it up, and we pushed it back down. And we pushed it up, and we pushed it back down. So sellers are stepping in here and taking their profits. And a lot of these sellers are people who bought over in here, and they just want to get out at a break even. They just want to get their money back. And, this is what forms support and resistance. It's people, it's emotion. And that's what trading's about. It's reading a chart about. We're not just looking at candles, blocks, lines, wicks, all of that stuff. We're looking at the culmination of the emotion of a lot of people. And right now, the people are saying, momentum's getting weak, I'm not too sure. So I see it coming up to this area, and I'm just going to take my money. I only made 3.3% in about 2.5 months. That's not the greatest return, but it's not a bad return. Better than you're going to get from your savings account. And again, if I choose to, I can get back into this. This is setting up for a perfect breakout here from this candle. And I'll show you a quick Fibonacci measuring technique here. If we were to take the breakout level and we pull it down to where it went, and then we're going to draw in quick. This would be target number 1. I would have 3 targets set off of this. We'll just call this target number 1. Fibonacci lines. I use Fibonacci lines. I also use measuring techniques from specific patterns, depending on how I feel, what I feel is appropriate. So in this case, this is a target from this breakout of $127. That's a good 10% increase. And the time frame would be approximately 3 months from now. So that would be June, July, August. So by the end of August, we could see this stock sitting at 127, in the 127 area. So this is a good stock to watch. Watch for this breakout. Keep this on your watch list. That's all I have for today. Trade wisely, have fun, make money. And again, this is Stefan from tradingcandles.com, where we learn to trade and we learn to profit. Thank you very much.